Welcome to Deal Flower News. Today we are talking about fintech. So I welcome the guests of today, Jeroen van Oerle and Christian Vondenbusch, co-portfolio manager of Lombard Odier Global Fintech Funds. So thank you for being with us. First of all, I would like to start with you describing your global fintech strategy and what are the main objectives for the future.
For us, fintech is really financial technology. There's not a very clear definition of fintech out there, but for us, it's all the technology that either enhances existing financial offerings or enables the creation of new ones. And we've built, since we've here joined at Lombard Odier, an investable universe of more than 300 companies which are active in our definition of fintech. And from those 300, we then pick the highest quality growth at a reasonable price, of which we make a portfolio of about 50 companies.
And something about the objective you have for the future.
Yeah, so the objective is really with one fund to benefit from the digitization of the financial sector, and that through a quality way of investing, and by that outperforming MSCI All Country World through the cycle.
So fintech with artificial intelligence, blockchain, crypto assets is really changing the current scenario. What is the perspective of what you imagine and why, in your opinion, is so important to invest now in fintech?
So for us, fintech actually consists of a lot of sub-trends, a lot of new technologies, as you rightfully mentioned, blockchain, cryptocurrencies, but also artificial intelligence, big data, embedded finance. We always look to invest in these companies through a high quality perspective. So we only pick out the companies not as a one-trick pony, but really as something bigger and as part of a big conglomerate or high quality names. And we think that actually there is a lot of difference in the maturity stages of those technologies going forward. So for example, the payment technology, what it all started with, let's say 15 years ago, that's starting to become quite mature. But then, as you rightfully said, blockchain and crypto, that's all new technology, and that is going to influence our investable universe in the years to come, and will drive growth in the years to come. And in order to benefit from that, what we need to find out is who is going to benefit from those technologies, and what are the best companies to pick in order to get the returns that we want to make with them.
And what we actually see is in the current crisis that we have been in the COVID crisis, that all of these trends that were already in place, whether it's the payments digitization or the digitization of the banking sector, or for example cyber software, all of the trends have been accelerated, and we see that reflected in an accelerating trend in terms of revenues and in terms of profits. And profits, it's really important because these days it's back to fundamental investing again, where profitability matters, internally financed growth matters, and quality companies are becoming the new outperformers again, after a period in, say, 2020, when it was all about loss-making, hyper-revenue growth companies and moving up the risk curve as much as possible. So now it's really quality investing that's back into favor within the digitization of the financial sector.
And we very clearly also differentiate hypes from long-term trends. It's an important difference, because a hype is something that is very short-lived, very momentum-driven, but what we do is we really look at the long term and then decide which company is best fit with that long-term future.
Yeah, as you mentioned, there is also a combination of technologies, past technology and new technology that get together. You mentioned also investments. How do you see these sectors, so fintech as an investment, and which mistake have to be avoided in this point if you want to invest in fintech?
Yeah, so for us, it's very important, if you want to invest, that you really invest with a long-term view and that you invest through high-quality companies. What we see happening a lot is that people simply just buy the hype. They don't do their fundamental work, they just buy the company because it has exposure to crypto, because it has exposure to blockchain or whatever. But what we say is you first need to understand the drivers of the change, and then do your homework, do your fundamental analysis, look at the management of the company, look at the earnings, look at the long-term perspective, take into account ESG components as well. Yeah. And only after you've done all of the analysis, you start to invest, and you do that in a very disciplined and diversified way. Instead of putting all your eggs into one basket, you diversify and you let the returns and the growth accumulate over time and let time basically do the work.
So besides quality, it's also about the valuation, but it's really about discounted cash flows, discounted economic profits. So is the future profitability of a company reflected in the current valuation or not? So that's the basis where it all starts with. Can I benefit because it's not yet reflected in the valuation? And another point which I would like to stress is the purity. What we've seen with fintech, but with a lot of thematic funds, is that they were all investing in FANGs, in Amazon, in Google, in Alphabet, etc. But for us, fintech is really high purity. So we need at least 20% exposure to the financial sector. That's fintech to us. We don't invest in Apple because they do something with fintech. It needs to be really pure, and it needs to be the driver of share price performance.
Yeah, so like to sum up, like the vision, the diversification, and the technology itself in the financial sector is as like the driver you follow.
Yeah.
Thank you so much. Thank you again, Jeroen van Oerle and Christian Vondenbusch, co-portfolio manager of Lombard Odier Funds Global Fintech, for being with us in this flower.
Our pleasure.
Thank you for having us.